Overthinking and subjectivity can be the downfall for many traders. Whether you're searching too hard for a trade or you're having flexible rules for determining the market state, that's not the road to discipline and consistency in trading. When I started trading, I had a tendency to overthink many things. If I was in doubt, think it out was something I strongly adhered to. But in the end, it just caused me to see things that were not really there, like a trend, for example. And you've probably heard the saying that you trade what you see and not what you think. And it does contain a lot of truth. And I would add the following to it. Trade what you can easily see, not what you think. And that just means that if something is not obvious on the chart, like it doesn't just pop out and show itself to you, move on to another trading instrument or a Forex pair. And I'm not a trading indicator junkie at all. And it's true that sometimes use of an indicator or two can help bring simple to your trading, especially for the overthinkers that are among us. But even something as simple as the direction of a trend can cause a headache to a trader. Even though you can see by the price pattern of higher highs and higher lows for an uptrend as an example, sometimes our brains just want to find the less obvious. This chart here, when I started trading, I probably would have said that this was a market in an uptrend due to the move on the left. Now remember, the right side hasn't been here yet. There's a stair-stepping type of pattern that we want to see in a trend. The green bull candlesticks are bigger than the red, so I would attempt to buy into pullbacks to get involved in what I thought was the overall trend. That last hard red candlestick that shows momentum to the downside was right into a previous swing low. And this could have been thought of as an exhaustion thrust, and more upside was in the cards. And you can see by the blue arrows that my longs would not have seen much in the way of profits. I may have even added to the second position when the third pullback occurred. Now remember that we trade the hard right edge of a chart, and what might be obvious in hindsight, it's not during the actual trading event. Now I would have taken a loss because the filter that I was looking through was not clear. I was caught up in making huge profits, trading the trend that I thought was in play, that I would miss obvious events that should have been a little more clear. And while the stair step was in play, the momentum upside was not as strong as it appeared. Was the trend weakening? Doji candles show indecision in the trend. If a strong trend was really in play, I should not be seeing as many doji candlesticks as are here. Upper shadows are a sign that the buyers were getting pushed back down by the sellers. So the buyers were not fully in control. And the pullback off the top was strong. And at the very least, I should have stood aside to see what was occurring after that. And as well, I did not see a failure test of lows, which is something that I look for in my trading plan. So what else was I missing? Well, there was also a hidden pullback on a lower time frame chart that's shown by the first green candlestick after the high. The weak pullback showed very little buying pressure, and there were huge bear candlesticks. Prices failed to make higher high and effectively becomes a consolidated price structure. And once a lower high is put in place, my trading plan now calls for potential ranges. And I just sit aside. Now, seeing how the chart was evolving, this should clue me into scaling out of a position or just close the position until whatever's happening resolves. What I should not be thinking is to position myself into a long trade while in consolidation unless I am seeing a price action sign of one side taking control of the market. If I would have understood that the trend was in trouble, it does turn into a full-scale reversal. I could have saved losses and the commission costs of trading. Not only that, it could have allowed me to take advantage of trading setups on the lower time frame because I understood the state of the higher time frame. Oftentimes, the market can give you conflicting signals. And if you guess wrong, it can cost you money. Attempting to trade in a choppy market state should only be undertaken by skilled traders. Now, trading in the direction of a strong trend, even if the setup is not crystal clear, it gives you better odds of making a profit. Trading the wrong direction or attempting trend trades in ranging markets, it's just a bad move. Having an unbiased and objective opinion on the trend and the current state of the market can really be considered step one in finding good trades. And sometimes, though, a trading indicator is called for. Here is a weekly Forex chart, and it gives you an objective determination of trend direction. And you can see where on the lower time frame, such as the daily, you'd switch gears and look for appropriate entries according to your trade plan. It takes all subjectivity and the personal bias out of the equation, and it tells you trade in this direction. If you trade many currency pairs, especially if you use the 4-hour time frame, that can be pretty time consuming, switching back from the trend chart to the setup chart. So we can use an indicator like the one here on the bottom that actually shows you the weekly trend while looking at the 4-hour chart. You can clearly see where you'd be switching from a long bias to a short bias. If you saw the indicator switching back and forth between the colors too often, you could just determine that the market is not in the best trading condition and sit aside. Fast trend changes on a higher time frame can have you whipped back and forth on the smaller time frames. Now, soon after the indicator tells you objectively to take short trades, as shown in the chart that we just looked at, we have a complex pullback using A to B equals C to D, and then a reversal setup to get you into the play. A quick glance here showed what direction the higher probability trades are in. And to a vast number of traders, this is the type of trading indicator that they need to keep them on the right side of the market and away from the guesswork and the knee-jerk trading. You can even use another trend indicator, such as this one here, alongside a trading strategy like the Alligator Indicator strategy. And instead of using the golden cross as a trend direction, you could use this. Now, we want to help traders succeed at Netpicks, and we decided that instead of selling this indicator, we could just help people by giving it away. There's no strings and there's nothing to pay. Just enter your email and you can download the indicator. And you'll also have access to complete installation instructions, including trading videos, so you can get maximum use of the outstanding tool that we have here. Like, I can't say that knowing the trend direction is going to save your trading career, but it certainly can help.